What's going on, everyone? Markets fell very hard today and are very overextended to the downside, just how we like it. All right, so we're going to go ahead and cover the entire markets. Things are starting to look very, very interesting. I'm going to try to make this as quick and short as possible for everyone here. And let's get started right with the video. All right, so here's a chart of the SPY. Number one, we are trading outside of the lower level of the Bollinger Band. We love to see this because historically, anytime for the past 2 or 3 years now that we've been trading outside the lower level of the Bollinger Band, if you were to buy at the money calls for 2 months out, they worked out 100% of the time. So if you went and bought these dips, longer term calls, these would eventually be profitable. All right. But of course, you know, it pays to be on time. All right. So currently, let's look at the technicals, right? So number one, the RSI is now sharply moving downwards, which is a very good sign, obviously, because the market is falling low, right? That's exactly what we want to see. We're very close to becoming oversold on the RSI as well. And the MACD is moving lower as well. All right, so this is the SPY. I want to show you guys the SPX because my chart is a little cleaner. All right, so this is the SPX. And this is what I think could end up happening. So back in September, early October, we ended up making an inverse head and shoulders. And I was bullish and making videos and sharing my thoughts with you guys back here. And it looks very similar to what could potentially be happening right now. So the number one factors that we have to look for is the SPY traded outside the lower level of the Bollinger Band for the first shoulder, right? And then for the head, we ended up making lower lows. So we made this low, right? Cool. We ended up breaking down below this level of support. And at this point, everyone was very, very bearish and everyone was basically like, okay, that's the end of the bull market. We didn't hold this level of support and it's over. Because every single time that we made a huge low, we never retested and broke down below it. So this was the first time that we made a new low and it caught everyone off guard. And what ended up happening was, you know, obviously we held this low here and then made another higher shoulder upwards and then made new all-time highs, whatever. So the main thing that I want to show you guys is the RSI. So the RSI in this instance over here was, you know, low, but it was never lower than this. The RSI continued going on higher for each portion of this inverse head and shoulders. So the left shoulder, the RSI was over here. At the head, the RSI was obviously higher. And then at the right shoulder, the RSI was much higher. Okay, so right now, this could be creating the same situation here. In my opinion, I think tomorrow, maybe Friday might be the last days during the week until we see a movement upward. All right. So right now, you know, this whole move right here was basically left shoulder. If we fall a bit lower, that would be the head. And then I'm expecting us to bounce. So the reason for that is because the RSI is showing positive divergence. So back here, the RSI was much lower, right? It was at negative 24. And I don't think that this time the RSI is going to get to negative 24 because for that to happen, the SPY would have to be at like 410. And if the SPY goes to 410, I won't even care much about inverse head and shoulders. I'll just buy all the dips. But because if we fall down that heavily in such a short amount of time that causes the RSI to become that oversold, we just have to blindly buy dips at that point for a bounce upwards because, you know, the Fed hasn't even changed any rates yet. With all of the basically the problems in Europe right now, the Fed is also going to be less likely to increase rates at a much higher level. So, you know, we haven't had a macroeconomic change in policy yet. So if the stock market is falling this low, especially when Bitcoin has not broken down any major levels of support as well, it's a really, really good sign that a bottom is forming. So if we break down below this level of support, the RSI could become oversold, but it would stay higher than 24. and we could create a head here, you know, over the course of Thursday and Friday. And then that's when I think the pop up would begin. But, you know, regardless, if we continue falling this dramatically outside the lower level of the Bollinger Band, it is just a very, very good indication that the market will rebound. Every single time we are trading this far outside of the lower level of the Bollinger Band and close, for the past, since the COVID crash, we have always returned back. And the Bollinger Band strategy has been one of the things that we've literally just been monitoring together, and it's always worked. All right, you can't argue with it. You could go and test out the strategy. You can go back and look at history anytime that we're trading outside the lower level of the Bollinger Band like this, especially for multiple days consecutively. It just increases the likelihood of a bounce. All right, so this is a really good signal that we fell this heavily for bulls. All right, for bears, what you would want to see is a dragged out, slow fall, but a nice, solid capitulation to the downside means that bears got what they wanted. And now it gives a better opportunity for people to start getting along. All right, so there's that for the SPY. I think that the next few days should be an intermittent bottom. But of course, you know, we have to see. I've just been very, very patient during these past few days, especially because I wanted to see how the market responds to all of the war news. All right. And with basically the war being solidified now, it's basically, you know, the news and the shock of the initial things aren't going to be there as much. All right. So we'll see. We'll see how the next few days play out, but this is a good sign that the market could begin to rebound. Now let's go ahead and take a look at the IWM. So the IWM, obviously not oversold yet on the Bollinger Bands. The MACD is very close to a level of support for it, right? Which is a good sign. And the RSI is not as dramatically down as the SPY. All right, so essentially we were trading at about 195.50 on the IWM for a while. It got many people bullish, and I wasn't sold on buying calls just yet. And essentially we need to see now if 190 holds, and then if 190 doesn't hold, we're going to have this level of support down here. The upside levels are obviously going to be 195.50 and then 198, and then of course this 200 level. But there's not really much else to talk about on the IWM. Let's talk about the large tech stocks. All right, so this is Apple. You can see that it's getting very close to this lower level, this lower trend line here. And that's why I'm saying that there still could be more potential room to the downside. What we saw out of the IWM is basically not showing as much weakness as we need to see. And especially now with these large tech stocks, you can see that they're still signaling some more downside room. All right, so Apple, we still have some more downside here for it to start trading outside of the lower level of the Bollinger Band, for it to become, you know, a bit more oversold on the RSI, and for, you know, the MACD is not falling as dramatically as we want it. So essentially a very, very important level of support for Apple tomorrow is going to be 159. If 159 breaks, you can essentially basically go short for a day trade. And we're going to be looking at this trend line. If we break down below, a break back above on Apple is going to signal bullish momentum. All right, so Apple still showing more downside momentum. Microsoft, beautifully traded and closed outside of the lower level of the Bollinger Band here. All right, the RSI is obviously also sharply falling, which is a good sign. And the MACD, it's not exactly showing as much weakness on the RSI, which is why I think there still could be another day or 2 days of more downside room. But closing outside of the lower Bollinger Band, guys, is a very, very good thing. It means that a bounce is going to happen soon. The reason for that is because the Bollinger Band tracks the standard deviation away. I feel like I've said this like 500 times, but it tracks the standard deviation away from the 20 exponential moving average. And basically, when stocks are trading outside of the lower standard deviation and close, that means that they're very overextended to the downside. And what stocks end up wanting to do is they want to revert back to the mean. And it's a very, very good sign when a $1 trillion company like Microsoft is trading this low. All right. So, like I said, in the past, we did have multiple days that were trading and closing outside the lower level of the Bollinger Band. But this is a good sign that a bottom is starting to form. Okay. So, 280 obviously needs to hold. And then this low here at 276 needs to hold for Microsoft. But at this point, any huge downward movements in the short term is going to be very, very good for us. So Microsoft, you can see it's very overextended to the downside, all right, which is good. Google, not so much. Google is it's trading in a bit of a range. The RSI is not as bearish, and the MACD is also not showing as much weakness. So Google isn't really showing that much weakness, which is why I think there is still more downside room. Amazon also, this is showing, the RSI is sharply falling and the MACD still looks the same essentially, but it did fall. It fell basically 100 points. And this is a good signal. Essentially, it came back to this level of support, which was the prior high here off this pop. So 2880 essentially needs to hold. And if that level doesn't hold, really, Google, Amazon, Apple, they're still showing more downside room potential. But Microsoft, it isn't as much because Microsoft is already trading outside the lower level of the Bollinger Band. Similarly to Tesla, Tesla is also trading outside of the lower level of the Bollinger Band, similar to Microsoft. And that's a very good sign for the NASDAQ, because when multiple $1 trillion companies are very overextended to the downside from the standard deviation, that is a very good sign that eventually they're going to help bring the NASDAQ back up and help bring, the rest of the stock market up as well. So that's why I'm saying we could potentially have another day or two where we do fall further, but it's about to get better. So we broke down this major level of support here at 780. If Tesla can come back to 730, that would be amazing. That would be spectacular. Oh man, because if we get to 730, it would cause the RSI to become oversold. The MACD is already showing a lot of weakness, which is very, very bullish, essentially for like a bounce upwards, but it's showing a lot of weakness. And if we can fall down to 730 tomorrow, that would be spectacular. That would basically help. If Tesla is falling, the rest of the market is definitely going to be falling. So that would really, really help a potential bounce. All right. So what we saw out of this was Microsoft and Tesla are very overextended to the downside already. Apple, Google, Amazon are showing more downside potential. But Apple is very close to a major trendline level of support at 159. All right. So there's that for the large tech stocks. Let's take a look at the 30-year bond very quickly. All right. So for the 30-year bond, we can see that essentially what we need is the MACD to continue moving on upwards. And for that to happen, the price of the 30-year bonds need to continue on higher. This blue MACD line needs to become much more overbought, which will cause this yellow MACD line to eventually follow it, right? It will follow the blue MACD line. And what we want for bulls, essentially, is we want this yellow MACD line to start bouncing and showing upside momentum. If the 30-year bonds are doing well, then the NASDAQ does well. That's basically as simple as it can get. All right. So the fact that the 30-year bonds have been showing strength while the NASDAQ and the rest of the market have been falling these past few days is a good sign that there is a momentum shift in bank and hedge funds overall outlook for the market. All right. So there's that for the bonds. Let's go ahead and take a look at the NASDAQ. All right. So for the NASDAQ, very similar to the SPY, it's very close to being oversold on the RSI, which is a very, very good sign. You can see that the RSI also fell very sharply to 23.4, 22.5 back here. And we are now trading below, we're trading below January's low here. So this is really, really nice. Let's see if we can come back and retest 324. 324.28 is essentially going to be the next major level of support. If we can come back and test that tomorrow and Friday potentially, the RSI would have became oversold. And then if this level holds, it'll essentially be perfect. But, you know, once again, we're trading outside of the lower level of the Bollinger Band. Microsoft and Tesla are also trading outside the lower level of the Bollinger Band. They're large trillion-dollar companies. And, but we have to understand that there's still more room to the downside for us to become oversold on the RSI. And Apple, Google, and Amazon are still showing a bit more downside potential in terms of weakness away from support, as well as in terms of being away from the lower standard deviation. So that is what you need to take into account until we can get really, really comfortable going long overnight. Because now we can see that war is not causing the market to dramatically fall overnight, etc. Because this morning we saw the market open up green. All right. So we need to now just be patient, wait for a bottom to form. Essentially for tomorrow, if we don't fall very, very heavily, what we're going to need to see is not a small bounce. We're going to need to see a nice, strong bounce above major levels of resistance. So do not get overly excited if tomorrow we start getting green and then we close, 1% green. Where would 1% green? Oh, yeah, 1% green would put us right at this resistance level at 332.86. That would not be bullish. All right. What we want to see on the NASDAQ would be a close above 333.14, which would really signify like a much stronger close. That's when we would get more bullish. That's when we would start to look for buying more dips. But of course, these dips would only be for over 30 days out. Okay. And that would give us time. And essentially, now that we're trading outside the lower level of the Bollinger Band, it's mathematically stacked in our favor that this trade always works. So ideally, what I want to see is more downside room. I want us to open up. I don't know if this is going to be possible, but one can hope that we open up red, and that would be spectacular in my opinion. That would be if we open up red on the SPY or the NASDAQ tomorrow. You have to buy the dip. Because statistically, it's so in our favor that when we are trading that low outside the lower low of the Bollinger Band, it's almost always in our favor. All right, obviously, I'm not your financial advisor. This isn't financial advice. Blah, blah, blah. But it is what it is. All right, so that's what I'm going to be personally doing. And there's that. The other thing that I really, really want to show you guys is the strength that we see in Bitcoin still. All right, so regardless of this huge, disgusting moves to the downside in the equities market, Bitcoin has held this level of support and it's held this trend line. And regardless of the noise and everything that was going on in the equities market, Bitcoin has held strong. So this is a very, very good sign. The fact that Bitcoin is holding strong and the fact that the momentum has shifted in the 30-year bonds. Those two things are very, very important. I was going to cover the VIX in today's video, but I didn't get a chance to. But essentially, yeah, whatever. I'll just cover that tomorrow. But it's a very, very good sign that Bitcoin is also holding support. If the markets were legitimately breaking to the downside, Bitcoin would have broken down below 36, below 30, below these levels of support as well. But the fact that it's not is a very, very bullish sign. Okay, so it also tells us that this downward move in equities seems to be an overreaction. All right, so I hope you guys enjoyed today's video. I will see you guys tomorrow. Make sure to like, comment, subscribe, do all that good stuff, and yeah, have a great day.